Hi guys, welcome along and thanks for checking out this video, our September Market Watch. I've got a number of seasonal patterns I want to identify and talk through with you on this video. So let's get started. First of all, let's do a bit of a recap of where we're at. It's the 30th of August and historically August isn't the greatest in terms of momentum and follow through and trend in the market, and this August certainly hasn't done anything different generally. So we have a lot of markets that are been quite constrained, quite tight with regards limited movement. Certainly in a forex market, we have very limited trending opportunities there. But hopefully, as we go into September, we tend to see the markets open up a little bit more direction, maybe more money flowing back into certain markets. So we'll try and identify a few that are worthy of watching and what potentially could be happening based on what we're seeing at the moment. So first of all, we'll have a little bit of a look at what we generally see, and if we look through the August pattern, it's quite evident. We see here pound and the Australian dollar generally having weakness. Aussie, certainly one of the currencies, been coming under pressure, and as is the New Zealand dollar, very much underperforming. And it's been continuing its typical seasonal pattern through August, as the indices look across the US markets here. Down the S&P particularly underperforming as you'd expect, and those of you who have been following my webinars would know I've been talking very much about being bullish on the US Treasury bonds, and that's certainly what we have seen. And as well, gold is another one of those markets, typically has a strong August, and that's what we have seen. But now the interesting thing I want to look at in this video is the fact that we tend to move into a little bit of change as we head forward. You'll see a lot of the markets where we've seen red start to get a little negative numbers, start to get a little bit positive, not huge numbers here. We're looking at the equities to begin with, but they are positive numbers as we head into September, October, and certainly into November. Same with the Treasury, or the opposite now on the Treasury bonds. They've been performing very, very well. One of the best performing markets of the year. But we tend to see the tide turn a little bit and get a little bit more negative as we head into the next couple of months. And gold's likewise. I say August is a period when gold really performs very, very well, and we've seen it continue, and it has been performing well in recent months, but it starts to ease as we head into the next month. So that's something to bear in mind, and we're going to focus on a few of those patterns as we go ahead. So that's the high level overview, but it's interesting to see how closely markets are following what we generally expect them to do. So it's nice that we get that, and there's quite a few markets that are doing that, because it gives us a lot more of a directional bias whenever it comes to making our trading decisions. Moving away from these figures and into the actual charts themselves, the seasonal charts, obviously where those figures are derived from. What I want to focus on in this little video is actually a very specific seasonal pattern, which I don't generally talk about in these videos. It's a little bit more specialist, but I'm going to be talking about the presidential cycles in this, not just because it's on the news, but obviously you've been following the news, and a lot of the US presidential campaigns all back up on the news and the media again. But it actually is a very interesting time as we head into September in terms of that seasonal pattern. Looking here, you can see the S&P 500. The typical, just to explain the election pattern, obviously is the performance of the S&P in each of the 4 years within the presidential cycle. So if you're not familiar with the presidential cycle, something you can take a look at in your own time, go have a look at our site and go through a little bit more detail if you want to do that. I'm just going to go over some of the high level patterns to look for. But generally you can see there's a big variation between the patterns across the 4 years. We are in the pre-election year. Next year, obviously next November, will be when the US election is actually held. We're in the pre-election year, which is the yellow line that we see here. Generally we see a very strong performance in the first 6 months of the year, and it gets a little bit mixed as we head into the next 6 months of the year. So that's part of the pattern we're going to be looking on. That's where we're going to start. So we'll start with the S&P 500, as I say already. Now looking at the presidential, it's the same pattern, but it's a different color here because of the weighted average that we normally get. So this is the general, the standard seasonal pattern, the yellow and the blue, the ones we're more familiar with from the other seasonal charts. It's on our site. But we've overlaid the pre-election cycle on through here as well. And you see very strong performance from January right through until about the middle of July, when we see a little bit of weakness, and then a range bound market. And we just pop over onto the S&P 500. you'll see where we bottomed out just at the end of December. We've seen a really strong move from January, that weakness through May that we typically experience in that seasonal pattern, and then a run up. We've actually topped out here around the 22nd of July, or 26th of July, sorry. So we're following that pattern very well, and we've seen that weakness now in a very much a range bound August. What I'm looking at through here is we tend to have a little bit of a move to the upside, and I do think we're going to see the markets and the stocks try and have a move to the upside or just push higher. Before then, I think we're going to see further weakness as we head later in the year. But from where we stand at the moment, ending in September, my bias is to the upside. Not expecting a huge move to the upside in these markets, but my bias is long from where we are on those. The next market which you're going to be focusing on in this video in terms of the presidential election, that is the US dollar index, and I'm going to take a look at that as well as a number of the other currencies that obviously we'll be looking on the other side of this. The reason why I want to look at the dollar index is because of how it typically performs from this period. Generally, you'll see the three lines is on this chart. Again, the purple line is the pre-election year, but generally you see the three lines perform very much in line with each other throughout the year. It's only when we get to this period here, we're just entering now, where it was slap bang right here, the crossover as we head into September, we start to see a little bit of a divergence in the markets. The standard historical pattern is for a little bit of weakness in September, but then the dollar index actually outperform and do quite well as we head through October, November. There's a bit of a variation in through here, so something to be aware of is the possibility of an extended period of weakness in that dollar index, and it's certainly the unique section in terms of this pattern from the presidential pattern diverging away from the standard seasonal pattern. Obviously, now looking at the dollar index weakening, looking at a few of the markets that will typically benefit from that. Obviously, one would be the euro. And again, you can see that divergence as well from the typical seasonal pattern on the euro. So we're looking here at potentially an outperformance of the euro and other market as well, which is interesting. Those of you who've been watching the webinar and following along with the COT data will know we've been quite bullish recently in terms of what pound could potentially do, and obviously it's very interesting. You see then the presidential pattern is in line with that, not typically for a low until about the middle of September, but it's certainly one that's on the headline or on a watch list, and it's something to be aware of, and it certainly is something I'm going to be looking at as we head into September. And if you in the context of where the pound dollar chart sits at the moment, we're sitting nicely in terms of possibility of a little formation of a double bottom, and it would be nice and right then for a reversal and a continuation to the upside. Another market which sees a big variation between the typical standard seasonal pattern and the presidential election is the Aussie dollar. Not particularly bullish on that market at the moment, and COT data isn't certainly suggesting we're going to see a significant reversal and rally in that market, but there certainly is a very big divergence from the standard seasonal pattern and the presidential one. To say the key thing with regards to the presidential pattern, follow where the chart is going. In this case, the key chart to follow would be the dollar index. If we do see an extended period of weakness begin as we move into September, especially if we start to see an acceleration of weakness there, that is certainly an indication we're going to be moving through September and following through what we're seeing here in the typical election pattern. So that's my view at the moment. There's a few things to look out for. Generally, the view at the moment with regards to equities is to continue a little bit to the upside after we come out of this consolidation period through August, a little bit to the upside, but beware of I would be expecting weakness again later in the year. And then now that key thing in terms especially of our currencies is to be in the watch out for an extended period of dollar weakness. Okay guys, as always, if you want to check out any of the other seasonal patterns yourself, by all means jump on and check those out, and also make sure you're backing up the seasonal pattern and the play that you're looking for with regards to COT data, because that tells us what's actually really happening in the market. And of course, if you want to jump on to any of the webinars in the coming weeks, I'll be talking through this and a lot more in detail online and live every Monday. So by all means jump onto those and you can follow through, and if you can't make it, you can also download my weekly analysis there. So okay guys, hopefully, as I say, we get a lot more movement and follow through as we head into September. A little bit of patience was certainly needed through August, but hopefully that will change. Thanks guys, I will see you again in September. Happy trading.